right, good morning, everybody. It's Cowboy Monday, 8:30 AM EST, and we are live and direct. Okay, well, let's start by taking a look at what's going on this week with the news, the economic data. So this is a good way to start the week if you are a trader, especially if you trade in currencies, cryptocurrencies, or just about anything. The economic data that comes out that's announced usually by officialdom in the, might be the Bureau of Labor Statistics or any group like that. That's going to give us some clues as to what might happen to price, or maybe it'll give us clues as to when price is going to, get some volatility. Maybe it'll move in an unpredictable manner. It might be a good way to tell when not to trade. Or if you are the kind that likes to trade the news, then that's when the data is going to come out, that we know it's going to come out, right? Like a lot of news actually doesn't come out when you know it's going to come out, right? So it's called news. Things happen in the market, and you react to it. And if it's not predictable, then there's nothing you can do about it. But if you do know that economic data is going to come out, you might not have the nature of that data. You don't know if it's going to, push price one way or another. But most of this data, especially if it's related to the US dollar, it's going to affect stocks. It's going to affect, especially currencies, things like that. So it's just a great time to either, like I say, avoid trading or jump in and trade the volatility, right? So let me go up here to share the screen. I've already got the data ready to go. Okay. And here it is. Not a lot today. As a matter of fact, it's going to be a quiet day for trading, like, say, the euro, the French, or actually there's quite a few. We got French, German, and Canada bank holidays, right? So it might be that quite a few of these currencies are just not going to have a lot going on. Maybe like the cable or something, the dollar versus the British pound, that might have some action. But overall, it's going to be a slow day for at least the euro and the Canadian dollar. So that's just something to understand about those two. I wouldn't trade either of those today. Tomorrow, Canadian dollar is going to have their CPI, which is going to be a big number. That's going to be 8:30 AM EST. So you might get some volatility trading the Canadian dollar. I do not like to trade the Canadian dollar very often. It is a very shady currency. There's a lot of liquidity grabs. Price kind of goes in a weird direction at times, and it's just unpredictable. And so unless you're sitting there watching it, there's not really a lot you can do. I suppose you could try to develop an algo around it, but that's, again, you're talking about something that is not exactly due to market forces, as far as I can tell. It just seems to be liquidity grabs that are done probably with algorithms by very wealthy people. You got Bailey speaking in UK at 1 p.m. EST on Tuesday. New Zealand dollar news pretty late in the evening on Tuesday. Late in the evening for, like the US EST time. And then probably early morning for them. GBP, British pound, CPY data at the European Open on Wednesday morning, right? 12 a.m. So 2 p.m. I'm sorry, 2 a.m. EST. You got FOMC meeting minutes. So that's probably 2 p.m. EST. So markets might slow down a bit on Wednesday because markets might be, just kind of sidelining money in anticipation of whatever gets said at the FOMC meeting minutes, which is just an hour before the market closes. So, that could be a tricky thing to try to trade. If you want to go in and try to catch that volatility, then of course that's up to you. I probably won't do that. Not so close to market close. European Open, actually, it's about an hour and a half after European Open. You get the French, German flash PMIs. So that's their services and manufacturing data. And same with the British, just a little bit after that, 4:30 AM EST. Thursday, you get the usual unemployment claims, which actually had a pretty big impact a couple weeks ago. So if it's a big miss, if it's, kind of an unexpected number, or if certain groups of people want to use that to push price around, that can happen. And the U.S. manufacturing and services PMI is also going to come out that day. So a lot of of data coming out on Thursday around the world at different times, I probably wouldn't trade until after the PMI. That is a red high impact event. And that's just talking again about your basically services and manufacturing. That's economic activity, right? Then you have overnight the retail sales data from UK, the European Open, and then 8 is the University of Michigan consumer sentiment. So that will add a little volatility possibly on Friday. Again, a lot of these items, it's just going to be how close they are to their estimation of how things are going to go, right? If the data comes out and it's, how do you say? It's a little far either up or down from the estimation, then you can get a pretty big move in the market. If not, if it's right on the estimation, then you might get a small pop and then not much after that. A couple of people, news is an acronym for Northeast, West, South. Yeah. So, all right. So that's that for the economic data this week. Of course, you're never going to understand you're never going to predict things like, somebody crashing in a helicopter or whatever that is. And just a quick note on that. So far, Iran is not seeing any foul play. And the opinion, at least my opinion, is that even if there was foul play, they may not say that because they may not want any kind of conflict at this time. So a lot of people are scared about World War III. I don't, just judging by the way things are going right now, I don't think there's going to be any kind of escalation due to that, right? Not right yet. It can change. Anything can happen. Just from what I'm seeing right now, it doesn't appear there's going to be any like saber rattling or blaming of another country. Looking at Bitcoin, everybody in Algo Factory knows I'm in a short on that, and there is reason to be in a short. Right here at this yellow line at 64,300-ish. There is a fair amount of liquidity. In fact, there is more liquidity there than anywhere else anywhere near price. And there is reason for price to at least temporarily head down before it heads up. But I am sticking with my bullish thesis where price does head up from here very much. This move up is still in play. It's just the price might take a quick move down on the way up. Something like this, right? And I can tell you what, if that short gets stopped out, then there is a pretty fair, that's indication of some pretty strong bullishness, right? It still hasn't hit the 1272. This wouldn't take it below the neckline, so it wouldn't necessarily invalidate the head and shoulders. But again, the liquidity is there, and the algo is there to go short. And at one point I was in nice profit, but price has been grabbed and pulled back up. So it may be that everything is just so incredibly bullish that the shorts just is getting wrecked. Could be. Again, the liquidity map, there's not a lot of liquidity short, and the only real kind of spikes of liquidity are above all-time high right now. So there's not like price has a lot to gain from going up without price wanting to go up by itself, right? What I mean to say is, look, the way that liquidity works is that price tends to go towards liquidity when the charts favor a move in that direction anyway. And at the moment, the high time frame charts certainly favor a move to the upside, but there's no liquidity up here that's anywhere close. You do have this liquidity sitting at 63,300, and that's a very reasonable place for price to drop to grab liquidity on the way up. So ideally, you don't have a lot of people like me who have shorted and their stop loss is above the current price, and price isn't given a reason to go up there. But you know what? That might stop out. And again, that would be a sign that things are incredibly bullish, and the original projection that I drew headed up like this is still what's going to happen. So I think it will happen either way. I just right now think we might see a little bit of a revisit down to this area to grab some liquidity on the way up. So we'll see about it. That's just what's going on. Okay, we're almost to the end of the private live lab. I'm sorry, the public live lab. Let's go over to Ethereum. Nice bit of long here on Ethereum. It's taking its time, and if Bitcoin does grab liquidity down below, Bitcoin or Ethereum may stop out of this little trade. I don't know that I even took this trade. I just mocked this up to show people a trade I might take. I did not actually enter this. It was at some point decently in a profit. You can see how price went into the green nicely. But again, Bitcoin does have that possibility of going down to grab liquidity. So At this point, Ethereum is relatively weak, so I'm not really interested in taking longs on it, right? The overall pattern is such that you have lower highs and then the same lows. Even in a bullish Bitcoin market, when you have lower highs like that, but your lows are all kind of in the same line down here at the bottom, that's not a bullish sign. That basically means that the bulls are defending the same number and the bears are getting closer and closer to crushing that number. So right now, Ethereum is not as bullish as I'd like it to be. Not as bullish as, well, let's just say it's let's say it's not as bullish as it needs to be for me to take a long on it. There are other currencies I would do that with. And we're going to jump into those charts here pretty soon. But before we do, we're going to jump over to the private live lab. So go ahead over, click that, or I should say zap the QR code. It's in the top right-hand side of the screen. You come on over. We teach people how to build trading algorithms. We also teach people trading psychology. I had a conversation with a coder buddy of mine who is who needs help with the trading psychology, and he goes, "What, can you brainwash people?" I said, "Well, we can give you the tools to brainwash yourself." And that's the biggest issue with most traders is trading psychology. It's not their abilities, it's not their algorithm, it's not their trading method. It's that they don't have the right trading psychology. They don't take the trades because they're scared. That really is the biggest failing of traders in my experience. So that being the case, come on over, algofactor.tech, trade your job, upgrade your life, and I'll end it with the classic right here.
Join us or die.